going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort, and China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols, who controls the underlying standards of the future of money will control the future of money.
We're looking at Bitcoin falling, obviously Ethereum actually falling even more. You're looking at Solana, Polkadot. I mean, it's across the board. Is this just a function of some of the big tech stocks? I mean, you're seeing that correlated. Are people selling out of that and selling out of this because they have to, or what's really happening?
Well, listen, part of the Bitcoin story was the debasement of fiat currency. And as the Fed looks to get more hawkish, some of that comes off. And so part of this is, people thinking maybe the Fed will be more responsible. Some of that is crypto's a risk asset. It still is correlated to the NASDAQ. But let's be careful, right? The NASDAQ's off 4% from the highs. Crypto's off somewhere between 35 and 40%. So it's had a lot of the fall. This last move down has been on low volume. There's been mostly selling, not buying, but it hasn't been big selling. I do think, down 40,000, 42,000 to 38,000, you'll find a lot of support for Bitcoin. Crypto had a monster year last year. It's hard to think you're going to grow to the sky nonstop, right? So this is a pullback. We see a tremendous amount of institutional demand, on the sidelines, and so I'm not nervous in the medium term. But we're going to have a lot of volatility in the next few weeks.
Speak to this, though. So first of all, you think that there's a floor at 38,000 on Bitcoin? Why do you think that?
Listen, I know big institutions who are going through their process to put positions on. And so I think they're going to see those as attractive levels to buy. On the charts, 38.40 feels like where we should bottom. Listen, all of us, every single investor out there has to have some, part of their head that says, are we going into a paradigm shift, right? Like we've had this philosophy that the Fed's going to keep rates low forever. And even now they're going to raise rates to 2% over 2 years gradually and continue to buy treasuries for a while. So we're in this liquidity bubble. And, inflation is 6%. If inflation doesn't come down like the Fed thinks it does, all bets are off. I look at the 10-year, it's gone from 135 to 170 in a week. On the chart, it looks like it's going to go to 2 and then 2.5. And so if it goes to 2 and 2.5, asset prices are probably not going to go high during that time. And so I certainly think portfolios need tail hedges. We should be open-minded to that. We could be going into a paradigm shift. I don't think that crushes crypto. There's too much of a movement going on, but it certainly slows it down.
But let's just speak to the paradigm shift issue, and also
welcome to the Crypto Teacher. And guys, I come back with that video just to make you think. And we have Mike Novogratz on CNBC. Yes, the market is pulling back, and who does he say is to blame? That's right, the Fed. The Fed is getting hawkish. But what do they always leave out, guys? The fourth industrial revolution. They're doing this for a reason, and they haven't even got started yet, guys. The only way to control inflation is what, guys? To raise interest rates. And we see those yield rates rising, and I told you guys it's going to hit cryptos and it's going to hit stocks. So we're going to have a lot of volatility, and the casino loves that. If you're a trader, you're going to love it. But the key words that Mike Novogratz stated, It's paradigm shift. And guys, what is that paradigm shift? That's right. Where the robots, algorithms, and drones take humanity out of the workforce and the sheep go into the metaverse. You have that right. In 2018, they tried to raise rates. It crushed the economy. And I don't care whether you have $4 trillion sitting on the sidelines, guys, because we know they're going to take that money to build. This is all based on Freemasonry, to build this new economy. This is going to be a controlled collapse of the United States dollar and the end to America, the Babylon. This is going to hit global, guys. Remember, the United States dollar is the world reserve currency. And once the United States world reserve currency gets hit by that digital yuan, backed by that SDR, the dragon rises. And remember, the crypto teacher told you, because he knows. When it comes to the New World Order, it's all planned out. You have a wonderful day.
I mean, to start things off, I'm actually going to ask about yields. What do you make in the rise in yields over the course of the last 2 or 3 trading sessions and those minutes from the Fed today?
Well, as you know, Will, I've been saying for over a year the Fed had to be far more aggressive than the market had expected with the inflation, I think, never temporary and going to get worse. And I think the minutes in December reflect a lot of concern of those Fed officials. And I think the market is beginning to say, yeah, they are going to get serious. I heard Steve Leisman say that there's 40% chance of 4 rate hikes. I think a couple weeks ago, I told Sarah there was going to be 8 rate hikes, and everyone jumped. I think they're going to do many more than 4 rate hikes coming up, and I think that fear is now what we see in the 10-year bond.
But here's the problem, Professor Siegel. The Nasdaq fell 3.5% today, and the S&P, got hit pretty hard as well. And how many more of those days can the Fed stomach? In other words, did the Fed miss its window? Inflation looks like it may be peaking. And if we continue to see these financial conditions, then things might tighten fast, not really affording them the opportunity to do rate hikes.
Well, let me comment a little bit. I mean, I love Josh, and I heard you interview him a little bit more, saying, we can't repeat 2018, but we're in a very different situation. We have $4 trillion more of reserves in the bank than we did back then. So when they began to run it off, it was beginning to tighten on the bank. We got $4 trillion. And we also have an inflation problem. Back then we had 0 inflation, inflation below the Fed target. So I remember we are virtually at full employment, in some measures over full employment. And the second important goal of the Fed, and some say the most important goal of the Fed, is controlling prices. So, yeah, there may be a market reaction. I actually think it's a rotation. That's what you're seeing. I still think we could have a good market this year, but certainly those with good cash flows are going to benefit at those that have the discount rates go way out in the future when the Fed is being aggressive. So I don't think it's going to be a bad market. I think it's going to be a rotated market, and I see that's what you've been seeing in the last two or 3 days.
Most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.